What is going on, Hot Take Nation? It is DRW here for another episode on March 132nd of the year 2020, where every day wakes up like Groundhog Day, and Sonny and Cher bring in a new day that feels exactly the same as the last, and we're just trying to get a kiss from Andy McDowell. Today on the show, we have Joshua Locke, and many of you probably haven't heard of Joshua, but you've probably seen his posts on LinkedIn. He's someone I have been following, and I wouldn't even say that it's a following per se as much as I really enjoy reading his content, because it's usually a thoughtful quote or a thoughtful chart or sort of an observation on what's going on in the world. And I always like talking to like-minded people who are articulate and intellectual about their thoughts. And so with that, I want to welcome Josh to the show. How are you doing today?
Great, David. Thanks for the invite.
Yeah, well, I mean, it's always exciting to meet new folks. So tell people a little bit about yourself if they don't know you before we start talking about social media and have sort of a wide-ranging discussion on the impact of social media on life. But curious your background and what brought you to LinkedIn.
So, I mean, I've worked in the energy industry for about 11, 12 years, for all of that time with ConocoPhillips previously, and then now Phillips 66. But I mean, mostly my experience has been probably like a lot of other people, fairly early mid-career. And then I guess more directly with LinkedIn was just, I kind of use it more of just a casual observer. But I guess probably about 3 or 4 months ago, when the shutdowns and all this, craziness started, I just got bored with the content on there. And I just felt like we could all do so much better. And just less posturing and more real talk, more what people really think. Because honestly, I think LinkedIn is a very unique medium where you have an audience of professionals. These are thinkers. These are people that influence culture. They influence business, the workspace. But I just see it for being something so much better than what it currently is. And
So let's talk about that, because I think that's a great point, and we'll start with, people like the commentary, especially as we come up to an election in 2020, where people will say this belongs on Facebook or this belongs on Twitter. And I tend to agree with you that I think that LinkedIn, people have a perception that this is like some sort of networking platform where you can reach out and yeah, it's sterile. It's sterile. And so in your view, do you think, how does LinkedIn, I mean, it's a Microsoft product. I think everyone knows that. And so it's embedded as part of a much, much larger platform for Microsoft than Twitter is Twitter and Facebook is Facebook. But what do you think LinkedIn could be doing better, or people who are on LinkedIn? Like, as you've grown your profile, and started commenting during the shutdown, what have you seen in terms of engagement or interaction or meeting new people, or what's that been like?
Well, I mean, so 4 months ago, this all kind of, my experience with LinkedIn started, and I'll be honest, like my initial apprehension of just writing what I really think, being totally blunt and myself, because I mean, in real life, I'm fairly blunt, but just being that real self on a medium that is clearly sterile was kind of intimidating, from like a career perspective, from just how it's perceived. But I just didn't care. And I was confident in the fact that I wanted to contribute something that I wanted to see others do. It's kind of like you don't get things sometimes unless you just lead out ahead and do what you'd love to see. And so I mean, that's kind of what it was. And it was weeks that I just would write. I mean, I was just kind of like blowing into the wind, right? Because most of my connections on LinkedIn were connections directly with with my work and people that are immediately in kind of my existing connections. And there's just not a lot of clearly not a lot of initial appetite for somebody who's just writing freely. And so there was, it was just like nothing. But I got connected with you somehow. I read some of your stuff, and then you started like liking some of my stuff. And I'll be honest, like you pretty much are responsible for how it's kind of blown up. But I remember messaging like, "Wow, thanks for the like." You know, I'm not used to this. I'm not used to the engagement on stuff I'm putting out there.
Well, and the reason I use it, I think, is a really good example. And I've been an advocate for a long time on LinkedIn. So I've always said, don't put seeking employment in your title, because that's just not that's not how the platform is used. And my perspective, and I think that you're a perfect example of it, is over weeks I was reading your stuff, and I always like stuff that I like. Like, I don't do it because someone sends me messages. I get people who send me messages saying, "Hey, can you like my stuff?" I'm like, no, I can't. I don't. I like stuff that I like. So write better shit if you want to like.
Right. And it's authentic. That means you're giving something that's valuable.
Yeah, and so, but my point is that like, I think you and I are talking, and you and I are connected because you invested 3 or 4 months of thoughtful dialogue and put forth things that I got value from. And now here we are having a chat. And so I think the true value of LinkedIn is building true relationships, not just like, will you accept my connection, and can we be connected, and can I sell something to you? But I really agree that putting content out there, I feel like I know how your brain works a little bit better. And so if we were in a working relationship or something like that, I know what to expect. And I think the same thing could be said, that you have a pretty good sense of me from my writing without having met before this Zoom call, right?
Right, that's at the heart of like what I'm trying to communicate, is that we should all be more authentic in that respect, right? That our virtual selves are in total alignment with our private selves, of what's on our mind when we fall asleep at night, or like that we're a truly authentic person. And like I don't think there's anything more any of us could ask for.
Yeah. Well, so do you have accounts on any of the other social media platforms? I'm curious.
I hate Facebook. I deleted my Facebook like a decade ago, but
yeah. So do you ever think about like, and I know a lot of your commentary talks about like commodities and price earnings ratios and Shiller's ratios, very, very similar to what I am. So, I mean, I hate that some of these social medias can be echo chambers, and that you look for and you like what you see. I like that you bring data and context to a lot of the things that people are observing. But
right, and that's important to me, just like from the nature of my work and everything I do. I mean, I'm obsessed with data, and that's framed my like evolution in the way I think, and the way my views on central banks, my views on monetary policy, monetary history. I mean, all of that's been framed by like almost a rabid pursuit of truth on these things, and that kind of goes back. I mean, that's kind of a story in itself, is kind of how this has kind of evolved in my approach. But
well, the Facebook thing, where I was going with that is, I think about these companies and these social media companies, and the amount of power they have. And I don't know if this was true, but there was apparently some Trump campaign ad that got banned by Facebook. Certainly there's been things that have been removed, and we see these companies who now have so much control. But at the core, their revenue is built by advertising, because we don't pay for Facebook accounts, we don't pay for Twitter accounts, we don't pay for LinkedIn accounts. Therefore, we are the thing they're selling, and they're selling us in the best possible way to advertisers. But it still feels like a newspaper of the 30s or 40s. And the last time I checked, media companies are not a good business. And yet, Facebook is one of the largest 5 companies in the market cap wise, and certainly control wise. Do you think that there's going to be a backlash, or what's going to come out of this, in your opinion, on the social media front? Do people start deleting accounts en masse? Like, why do you think that people are staying on Facebook and maybe not using LinkedIn more broadly, like the same way that you and I use LinkedIn? Because I don't have a Facebook account either.
I think the trend among people that care about ideas and dialogue and debate to a lesser extent, I think those people have already left Facebook. I mean, they're like, they don't want to sit and watch videos of cats and, and no disrespect to people's families. Like, they don't want to see like 1,000 photos of your kids every day. It's like, I think, especially I feel like other professionals, and especially guys my age, like there's not many of us that really care at all about Facebook.
Right.
I mean, they may have profiles, but there's a lot of people that like haven't touched it in 5 years, so.
What about Twitter? Are you on Twitter?
Yeah, I'm on Twitter.
Do you like the Twitter forum?
Yeah, I love Twitter. I mean, I like that it's even, I love that it's the Wild West. And if you haven't figured this out, I'm pretty libertarian bent. And I'm open about that.
I think that more people are discovering that they're libertarian. I used to describe
Of course
myself
they are.
sort of as a joke.
Yeah.
I think the phrase for me, since I have the Canadian upbringing, so I have strong views on access to education and healthcare. And so I think for a long time I sort of identified as the only socialist Republican that existed in the world. But I've come to realize that I am hardcore libertarian.
Yeah.
Which since we're on the subject, do you think that there's a possibility that you could emerge as a third party? And I don't mean an official party. I mean that you have a whole bunch of candidates that run in the 2022 election as pure independents. Because I'll say my view of right now is it's so partisan that even if you go in, and I've talked about potentially running in 2022 for governor of Colorado or running for Congress. And the thing that really holds me back is everyone goes in with the best intentions. And then you get there and party politics are such that you have to toe the line for your party. And so I've been giving thought to this and saying, well, maybe my campaign and my platform, no matter what avenue I pick, would be to run as an independent. Because if you had 10% of the House or 10% of the governors or 10% of the Senate were independent members, they would be the ones that the extremes have to convince so that it brings us more to the middle and we actually have dialogue instead of yelling. Because there's so many ideas that I think are great, but they don't get passed through because, party politics just totally dictate. And so I'm curious your view as a libertarian on if that's even possible, and would it be better to be a libertarian party or just be an independent with libertarian thoughts, or where would you go with that?
I mean, I hate brands. Like, I hate labels on people or party, real anything, just because all it does is immediately generate an association that people have in their minds with that brand or idea or label. And I find far more interesting just the thought of as a platform to educate. And I think, you could say, guys like Ron Paul, that was kind of their approach. And to the extent that they were serious candidates or whatever, you could make that argument. But I think some of the most value that a person running for anything can add is just to educate others. And that's why, at the end of the day, I'll be honest, I have fun. I have fun with LinkedIn and writing my ideas and getting them out there. But why do I do it? Why? It's not because it's certainly not because it's good for me, because most of what I'm doing is certainly frowned upon by the consensus views, but
right.
But it's because I enjoy it. I enjoy the idea of educating. And I think that these ideas that I've found and just self-study and pursuing truth is, I think that others will find value in them. And these are not ideas that you're going to get on the news, the daily news. You're not going to read about it in any media. From my perspective, these are suppressed truths, whether you can debate intentionally or otherwise, that are directly impacting like your daily life. Like,
so why don't you give some examples of some of these suppressed truths, and we can talk about education and the discovery of knowledge and the difference between the news media and what they cater to versus like true form research. But let's talk about some of the content that you put out and some of the things that you feel like it falls in this category.
Right. Without doubt, without question, like understanding central banking, the monetary system, monetary history, that is a black hole in education, a complete black hole. And honestly, if you start talking about it to most people, even educated people, you'll get a glassy-eyed look in a hurry, because it's just, oh, okay, I know, I've heard of the Fed, or I've heard of I've heard of Powell or Greenspan or Bernanke, and like these are people that you've seen on an article and you read about every 6 weeks when they set interest rates. But do you really understand what they do? Do you understand how it impacts your life? I mean, certainly maybe you understand that it impacts the interest rate that you buy your house with, but like there's way deeper implications for the price of money than people realize. The price fixing of interest rates, like if there's nothing else you take away from what I'm probably going to say, is that price fixing of interest rates creates distortions that are almost incalculable, because it comes as a result of, you know, self-described geniuses in a room with PhDs, and they all think that they can determine what the price of money should be. And like, that's just fundamentally wrong.
So how do you respond in the world? Because this is something that comes up a lot, especially with the epidemiologists of the internet now, where people say, "Well, you're not an expert on federal banking policy, Josh.
Right.
Why should I listen to what you have to say about federal banking? I want to listen to Ben Bernanke or
Right.
You know, I mean, pick your expert. But why do you think people reject the principles of knowledge just because, like, they seem to reject the person saying the knowledge as opposed to what the knowledge is? I find that an interesting element because, you know, Bill Gates wasn't an expert in computers, and then he was.
Well, he's an expert in vaccines now, right?
And then Mark Zuckerberg wasn't an expert in social media until he was. And people can say he had 30 years of building, but a lot of these companies were not what they are. And we rely on these so-called experts, but there's a dog in the hunt. And so you're always advocating for your own position, whether you acknowledge it transparently or not, is that you have a view, you put it out there, and instead of debating the content of that view and the arguments underlying that view, people say, well, you're not an expert, I'm not going to listen to you. I'm curious what you think about that.
Well, it's all self-reinforcing, I think. I think the people who largely have those views are other educated people with a degree in something, and they want to ascribe value to their own personal degree in something. And so by doing that, they're saying, I'm an expert in whatever I have a degree in, and so therefore nobody else can be an expert in anything that they don't have a degree in. Or like, it's all like the whole education establishment, if you will, is really grounded on that, of this idea where nobody can be an expert in anything organically. That,
right.
Like this idea that somebody would spend a decade obsessed over these topics and just read and study and learn about all this stuff. Like people like Josh shouldn't exist. Like, you're not allowed to have ideas. And so because I know, I mean, that's not a shock to me, right? Like, I know that. And so because I knew that kind of the perception, my counter to that is just that I keep coming. Like, yeah. I just keep writing. I
bet you read. I bet you read a ton. I mean, I think back to college, and I'm sure that a lot of people would echo this experience. College was, and the reason that I think kids don't want to go back in the fall, and quite frankly, if I had college-age kids and they weren't starting campus online, like, this is not about course content. I can hardly remember most of the courses that I took. I remember I barely made 8 a.m. classes for 2 years. I had to fail a course, little known fact, because I literally did not go to a single course. I did not study, and I went to the final, and not surprisingly, it was an advanced mathematics class. I didn't understand even what the questions were asking. So that was one. I remember trying to get laid. That was a big deal. It didn't happen that often, but I sure tried hard. I remember drinking, and I remember having a lot of fun with my friends. That's my college experience that made me an expert in petroleum engineering. And, what I will say is when I did my MBA, I worked a hell of a lot harder because I understood what it was that I was trying to accomplish. And I had a very limited amount of time because I was doing executive. I had like 2 kids, I had a wife, I was commuting, I had a huge job. And so I worked my ass off and I studied because I needed to. And so I would read all the books. So I'm a better MBA than I was an engineer. And I'm a better engineer now because I do all my self-study outside. And so it's like you talk about federal banks. I mean, I bet you've done a tremendous amount of reading, like multitudes of university courses on it, and lived it and seen it. and judged it. So what would you do if you were Powell and you were in his role today, and somehow you got like quantum leaped, like Sam Beckett, you just got dropped into Jerome Powell because Q saw the whole problem in the future and you got to go fix it? How are you changing policy as Jerome Powell?
Well, I mean, I'd shut the Fed. Aside from closing the Fed's doors down and letting free markets set interest rates, I mean, I would let rates rise. I mean, this is fundamentally what is going to have to happen at some point in the future, regardless whether the bond market forces them to do it outright or they decide to do it themselves. Inevitably, rates will have to rise to put a floor under the dollar, because the entire, I guess, last 2 decades of Fed policy has been progressively lower rates, and really you could say for the last 40 years, because I've got some charts too. That if we want.
Yeah, going back to the 80s, your parents would have said they had 15 and 18% interest rates. I remember trying to deflate the tech bubble in 98, 99. And Greenspan, who I think was the Fed chairman at that time, I remember rates going up like from 4.75 to 5.25. Like, I remember that because the market would crash. And as a younger person, I'm like, why would you raise rates? Because the stock market is going to crash. But then they would adjust for like a day, and then the stock market would just keep rocketing higher until 2000 happened, and then rates went down, and then they climbed again until 2007, 2008,
Well,
and then
yeah, I mean they. I mean,
like two or something.
Yeah, it's been multiple cycles of this where the Fed has refused to allow fair value to be found. And like you wrote something the other day about we need fair value in
Yeah, we need to
labor.
let price discovery happen.
Yes, price discovery. Oh, and I latched onto that. I wrote like some big comment and just like, we need price discovery in a whole series of things. Like I wrote like 5 or 6 things that we need price discovery in. And yes, none being more important than interest rates. But that's how we've gotten to this point, right? Is, because everyone wants a quick fix of drop Josh in there and what does Josh do in Powell's seat? Well, like, yeah, what needs to happen is ugly. Like it would have been like Trump becoming president and doing what he actually said he was going to do as a candidate, right? When he correctly identified that the problem is, an asset bubble, artificially cheap interest rates. Like there's the thing. Trump knows all this stuff. He's got the head knowledge. That's what annoyed the hell out of me, was that he correctly diagnosed the problem as a candidate, and I'm all in on that. You're talking exactly what I want to hear. And then, just like every other president before him, they all want to take ownership of whatever it is the existing bubble is, and then just make sure it doesn't crash on their watch. And so that's how we've gotten here, is everyone's obsessed with, extend to pretend. Better to die tomorrow than die today. Like that's the philosophy. But my point is that the longer that goes on, the worse the inevitable outcome is.
Yeah, I mean, it really feels like, and again, I talk about this all the time because it is my favorite movie of all time, and it's The Big Short. And the signals, and there's the Michael Burry character played by Christian Bale, who's just such a brilliant actor. And I obviously love movies and references and shows and stuff, but when he talked about like the instance of fraud is going up, and for me, when I saw that Kodak deal last week and have seen the unraveling of that, and so for those who weren't really following, it's actually worth the read, and not just the headlines, but effectively Kodak got a pharmaceutical deal, and they do have a pharmaceutical division, and they manufacture in the United States, and they got a big contract to manufacture generic drugs in the United States from the government, and the details were a little bit thing, but like their stock went from like $2 to, I want to say it was like 60. It was like a 30-fold increase over a 2 or 3 day period.
Yeah, and look at options activity the day before probably, and there you'll know.
And then it turned out that the chairman or the CEO had a deal that he had an anti-dilution clause, and so they granted him some form of options that like literally overnight became worth $50 million. And if you want to talk about like the problem with our country and our compensation structure is that CEO probably doesn't earn $50 million. And in energy, you see certainly tens, if not hundreds of CEOs who've overseen a 99% drop in the stock and pulled 50 or 70 or 80 or $100 million out of the company. And that is wrong. But when the incidence of fraud goes up to the level that it's at now, that's typically a leading indicator of the very end of the bubble. And in The Big Short, it was mortgage fraud because people were applying for mortgages under their dogs and stuff like that. And then it collapsed. So Eastman Kodak, to me, alongside Tesla's price rise, have been massive indicators of just massive overvalue. And this Apple and Tesla splitting 5-for-1, like 1,500 divided by 5 to give you 5 shares worth 300 is the exact same thing. And so retail investors, like, who are they catering to? They're catering to an astronomical valuation, and they're trying to get more retail people to buy them so that they can keep pumping their valuation. Like, those are the things that exist at the top of a market, and it's really scary to me.
Mm-hmm. And what I guess the crux of it for me is that what's making all this possible is the cheap money and the progressively cheaper and cheaper money, right? So it's like we were talking about with interest rates in the early 80s at 15-16% on the 10-year. And now if you pull a chart up of that, for the last 40 years, the 10-year yield is just straight down into the ground. And there's very real economic implications for that, right? So every time you make money cheaper, you're inflating an asset value somewhere because somebody's borrowing that cheap money and bidding it up. I mean, that's all the time. So this is the crux of why I think the most important way to value certainly financial assets in the stock market is to price the Dow in gold. And so if you've never seen that chart, if you've never pulled it up, I've got one too. So if we want to look at some charts at some point during this, we can do that. But
share your screen if you
got one. Share your screen. We're going to do the first ever share screen in the Hot Take podcast history. Anytime you want.
It says host disabled.
Oh,
well, I didn't do that. Well, we'll figure that out. So keep talking.
Okay, but basically, like, pricing the Dow in gold or pricing anything in gold, it lets you strip out the wet noodle aspect of the dollar, because if you're pricing something in dollars and you're looking at it over time, you're not really looking at the same thing over that period. Because it's like if you're looking at it, if you're looking at the Dow in 1975, it may have, like, think of it as it was a 12-inch ruler, let's say, and you're measuring it and saying it's 40 feet. Well, now that ruler is 8 inches long, and you can't say that it's 40 feet. It's fundamentally a different size ruler because we've been debasing the dollar the entire time. So by pricing things in terms of gold or other commodities, but I like to use gold and silver just because of the historical relationship. But okay,
but it is. Yeah, I let you share your screen, and so while you're pulling that up, I mean, the gold thing is interesting because I've started paying more attention to Peter Schiff. I'm trying to get him to come on the show.
Oh, that would be exceptional.
And I'm excited. I'm Danielle DiMartino Booth, who I do follow on Twitter, even though I don't have an account. I really value the things that she has to say, and so she's coming on as well, and we're going to talk about this. But the struggle I have with gold is, I mean, you still have to use $1 to buy it, and it's not really consumed for anything. So it's sort of like just as artificial as Bitcoin, which we talked about in the episode last week, or, I mean, you could sell hot take of the day hats could be a currency, for goodness sakes. I mean, I just don't totally get why gold. But, I mean, that's neither here nor there. I do agree that it exists.
There are people who believe.
Bring Peter on. That would be an exceptional discussion. Like, he would be an A+ guest. Definitely bring him on.
Totally agree. Peter, if you're listening, come on the show, buddy. We're going to get you out.
But I mean, actually, I would say a lot of my development and philosophies on these things was from reading a lot of his books. But there's this, like, what this is showing is the price of the Dow in terms of gold for the last 200 years. And this peak right here was the dot-com bubble. So basically the Dow peaked out at 47 ounces of gold. So you could buy 47 ounces of gold with the Dow. And then everything since then has been progressively lower asset prices in terms of gold. So what this demonstrates is that everything is really just currency debasement and cheap money masquerading as growth. And the drop down into 2011 or so was the previous gold peak, which just got blown away, a week or so ago. And then in this time since, the only reason this rally here happened, so this was the rally out of the hole. So this was when gold tanked after its last high.
Yeah, 2011. If I recall correctly, 2011 was the last time gold was at $2,000 an ounce.
Yeah, it was like 1920 or something. But yeah, the gold started falling, and the stock market obviously continued rallying. So that's why this leg up in the Dow Gold ratio started to happen. But it's important to ask yourself, why did gold fall at all to begin with? It fell because Bernanke convinced everyone that they were going to unwind the balance sheet, that they were going to normalize interest rates, that all of the idiocy from the recovery from the 08 extreme measures, all of that was going to be unwound, and it was going to work out okay. Well, like, those were all ideas that they said were going to happen, that now here in retrospect we can look back and those things clearly didn't happen. So I mean, it was kind of akin to, like, I've made this like comparison and stuff before, but it's like pilots that are dancing in the aisles of the plane, like popping champagne corks and just having a grand time, and just patting themselves on the back for a safe flight. But the plane's at 35,000 feet and the gear isn't down. Like, that's where we are. And so this entire leg up has just been, it's been a head fake, basically. And so what comes next is a precipitous drop in terms of in stocks and really all financial assets in terms of gold.
Well, and that's going to be, so to me, as I think about like the what's next, right? Because we're unbelievably, I mean, and I just want listeners to just close their eyes and listen to this statement. We are 1.8% away from the all-time high on the S&P. We are well above the all-time high on the NASDAQ. This is at a time when the last 3 months, if you listen to anyone, would tell you that the entire world has changed, and now we can work from home. Commercial real estate has different meaning. Jobs have different meaning. Mobility has different meanings. Cities are collapsing. I mean, I don't feel safe going downtown Denver. And I know that that's a big statement. I have friends who live in New York. 5% of the city of New York has left permanently the state. And people will not go downtown New York City because it is dangerous. Chicago, Portland. I mean, like, the world has changed so dramatically, and yet we're at all-time highs on the NASDAQ and 1.8%. Do you want to stop sharing your screen there, Josh? That to me is absolutely fascinating, and it has to end in some real pain or negative interest rates and just massive inflation of the currency. And the amazing thing is that if you inflate the currency at the same time as the real unemployment rate, so not the unemployment rate they like to announce, but the shadow unemployment, because like includes people who have stopped looking for jobs, is now like 19%, not 10. So 9% of the workforce has just not looked for a job. Part of that is because of the unemployment benefits and they're not really looking, but part of that is there aren't any jobs. So then there's more workers, supply goes up, the demand for workers goes down. Therefore, what has to happen to wages? They must deflate. But at the same time, we're printing currency, which makes the value of assets, hence why the NASDAQ is at all-time highs. Housing market hasn't corrected. Gold is at highs. So the holders of assets are getting more money, and the people who work for salaries are getting less money. So we're actually making everything less affordable, which is both deflation and inflation.
Real wages are falling.
Exactly. And that is what Black Lives Matter, like, forget Black Lives Matter.
It should be.
They should be in front of their neighborhood Fed bank. I mean,
100%.
Like, and go out there and stand. Yeah.
Yeah, I mean, the Fed says that they are not responsible
for like asset inequality.
They are, because right now, the people who hold the assets, if you had not done the stimulus and if you had not cut interest rates when we were trying to unwind the balance sheet, when coronavirus happened, rich people would have been wiped out. Now, I still blame the government for the lockdown, but that's neither here nor there. But if you truly want to create an equal playing field, they should not have done any stimulus. They would have wiped out massive companies, wiped out CEOs, bankrupted everything. Everything would have reset, and the people with no money would have had a more equal chance than they do today.
Competent people would step in and take over those assets and businesses. Like this is like somehow lost on people. Like they're talking about Boeing, we have to bail out Boeing and the airlines and all. Like, okay, the manufacturing facilities of Boeing, they don't go away. They're still there. The airplanes for these airlines, they're still sitting on the tarmac somewhere. Competent people, like this has been the case of creative destruction of capitalism for generations. This is how it works. Dumb people lose. They go bankrupt. The assets still exist. Smart, competent people who were prudent and socked capital away while everyone else were idiots move in, buy that stuff cheap, and now they're owned and operated by far more competent people, and we all benefit.
Yeah, I mean, I totally agree. And the free money that is available for people, like investors are making money and everyone else is losing. And it's just an interesting state. So you would abolish the Fed. Although the counterpoint to that would be in 1933, it took the Fed 3 years to stimulate the economy. They sort of did what you suggested post the 1929 crash. It kind of happened, and the Dow went down 90% over the course of the next 4 years. And it wasn't until like 33, 34, and then with FDR's policies in 1935 did they really stimulate the economy to get it back to work. Now, I would argue
that depression was so long because the government kept trying to do stuff. Like what most people don't remember or realize is there was actually a depression in the 20s, about a decade before the one that we all remember, and nobody remembers it because it was so brief and so short because the government did so little to do anything about it. Like it was just that's basically what I'm advocating is for a hellish repricing of assets that would be, it would be ugly, probably 6 months, a year maybe, that would be the worst period of American history that any of us had lived through. But on the back side of that, you get a tremendous opportunity for future prosperity. And most importantly, we preserve our liberties and freedoms, because at the end of the day, that's what a lot of this comes down to for me, is our freedom, our liberties. Because as this progresses further and policymakers and others become more desperate to keep the wheels on this machine, the efforts and extreme measures that will be taken to keep that in place are going to radically impose on our liberties and freedoms. Like that's the inevitable outcome of this for me. And so you talk about what makes me like the most animated about it. It's really about preserving liberties and freedom for my children, for my children's children. Not even so much the economic aspect. Like that's just a side effect, and it's the symptom, not the heart of the disease.
Well, and that's my pushback for what it's worth, and we can end the conversation there, because I think, again, what was the point? What was the point of the conversation? The point is, all of this is accessible if you take the time to do the research, and expertise is in the eye of the beholder, but you can truly understand, and then importantly, you can make decisions based on your life, based on your family's success, that are based on the theories that you have. And so I align more in terms of what Josh is saying in terms of the potential coming collapse of prices. And therefore, there are very specific actions that people can and should take
to protect against
that. The only thing I will push back on is that I'm not necessarily advocating for a collapse in nominal prices. I'm advocating for a collapse in real prices. Like if you remember Caracas or Zimbabwe or Weimar, or like just because things are collapsing in real terms doesn't mean necessarily that they're collapsing in nominal terms. That's what's so crazy, and it's difficult for people to wrap their minds around, is just because the stock market is rising every day or going up 2 or 3% a month, or in some cases a week,
a day,
that doesn't necessarily mean that you're getting more wealthy. And that's why that Dow Gold ratio that I showed everyone, that can actually collapse even though the NASDAQ stays flat or even rises.
Yes, no, and I totally agree. And again, these are concepts that hopefully listeners, when you think about real versus nominal, and when you think about the disconnect between the market and what it's pricing and the inflation that it could be potentially pricing, like there's a whole bunch of follow-ons here. And the point is, take the time, read, position your family to kind of be prepared for it. But what do you say to the people who are using, because this is the common narrative. People like to say, coming out of the Spanish flu in 1919, where they locked things down, which I think is a recreation of history, but that's fine. They all wore masks, 1919, and then the 20s were epic. What do you say to that model that people like to say that if the U.S. would just shut down for 6 weeks, I think is what the
St. Louis Fed guy came out and said.
No, Minnesota.
If we just shut down everything for 6 weeks,
Neil Kashkari, he's a real
everything will be great, and then we'll prosper. What do you say to those people?
Like, first of all, we might be able to do some of these like radical things that some of these people are advocating if we were a wealthy country in a strong fiscal position with tremendous savings, and we weren't one cash flow disaster or one missed paycheck away from a cash flow disaster. Like if all those things were true in a parallel universe, then okay, sure, let's have that discussion. But the problem is that America was a weak nation fiscally coming into this. We have way too much debt. Interest rates are artificially low. It's making all this possible. Like the economy was slowing before this even happened. Like that's why they started cutting rates again late last fall. Like they started cutting rates before this even happened. So we were already moving into a period of weakness in the economy, and then this is just, I mean, it couldn't have hit a more weak nation, and then all of the things that made us a weak nation, we're just doubling down on it. Oh, more QE, more money printing. Greater deficits. Like, I mean, the deficit this year is going to be probably the biggest in history.
Oh, absolutely.
I mean, the total debt now. So this is something else that I definitely wanted to get across, and why, like, Josh sounds like a crazy person, but like there's data to support everything I'm about to say. So the debt is about 26.5 trillion. It's almost 27. It's like, if you go to like US Debt Clock, whatever, that website.
I remember walking in New York like 15, 20 years ago, and it was 8 trillion. And now we're like 3x that in
less than 20 years.
So that thing is just flying. So it's 26.5-ish trillion, let's call it. The long-term yields on the 10-year have been collapsing for 40 years. We talked about that. So let's say the long-term norm for the 10-year yield, like it's not, like if you can pull that chart up, it's not outrageous to say that the 10-year goes to 7.5% on the grand scheme of things, like a mean reversion. Like if you respect markets at all, mean reversion. And mean reversion on the 10-year to 7.5%, okay, file that away. So the next thing to know is that 26.5 trillion, it has an average maturity of about 52 months. So just over 62 months. So just over 5 years. Over 5 years, that entire 26.5 trillion has to get basically refinanced. So it's like a 5-1 arm on a mortgage. So the entire debt gets refinanced basically every 5 years. So what this means is, imagine the risk that we're under in this situation where rates rise, go to say 7.5%. And I did the math on this the other day. 7.5% on 26.5 trillion. Imagine it just stops right now. It doesn't keep going, but just on 26.5 trillion, 7.5%, that interest alone is $2 trillion. Tax receipts are $2.1 trillion.
Yeah.
And I think the whole federal budget, if I recall, is like 3.1 because there's something like $1 trillion deficit. And yeah, so the entire federal budget is $3 trillion, and the interest is about to potentially consume at a reasonable long-term interest rate would consume 100% of tax receipts, which means taxes need to go up and services commensurately would go down just to service the debt, which means the only answer in that scenario is to continue printing money.
to
And if you raise
devalue it.
taxes, the GDP is going to tank.
Yeah. It is a precarious. I mean, but when you say it that way, then you go back to all the way to the Fed. The reason the Fed is printing money is to create effectively so much money that they're going to inflate their way out of debt.
Well, they think, yeah.
Yeah.
I mean, every case that's been attempted in history has ended in total failure.
And I think Harris Kupperman, if you don't follow him at adventuresincapitalism.com, we had him on the podcast about a month ago, and he talks about Project Zimbabwe and the hyperinflation that occurred
I have
there.
one of their 100 trillion notes.
Yeah, 100 trillion note. That'd be good. Well, Josh, I really appreciate you coming on. And I think, again, you know, what was the genesis of this? You were putting out content that I valued over a period of months. And so for those who are on LinkedIn and who might be looking for jobs or looking to make connections, it's not about sending an invite and then sending an email saying you have something important to discuss. If I send you my personal email and we can go offline off the platform, I'm sure a lot of people get those. But it's about creating value for people that then they look to you as a resource to continue to grow their mind and expand their mind, because they expect content that will do that. And so, Josh, I've appreciated you. You can attest we didn't know each other before this conversation, but I sure appreciate getting to know you a little bit better. And I look forward to continuing to follow your writing.
Thanks, David.
All right. Until next time, everyone, be safe, be good. Have a great day.